I just wanted to set the stage here, and we're going to talk about B2B. So all of us in the panel come from the B2B world. Some of us have looked at B2C as well. And the dress code says it all, jackets, except Alok. So he's a bit of a renegade when it comes to B2B. Now, I wanted to set the stage a little bit, and we'll then turn this into a free-flowing discussion. I've always been a B2B person in my entire career. I've done various roles. Right now, I head investments for Cisco here. And for me, and let me get a little personal here, and without getting too emotional. Last 2 years have been a little sad. Got these food, delivery, people flying in from New York, investing 20 million, 100 million. It's all the action is on the consumer side, people moving to smartphones, and a lot of that buzz. And when I look back, if you think about India, if you look at the 90s, the IT companies, the ones, the Infosys, the Wipros, the TCS, which just did not become giant companies in their own right, but actually impacted the country as a whole. So that was all B2B. And when I start reflecting on it, and like I said, I'm not going to be too emotional about this. When I start reflecting on it, I kind of wonder, what is it about B2B that makes it, pardon my French, less sexy, less attractive? Or is it that, it is actually getting quite attractive again? And I had, I can call it an epiphany, or you can call it a eureka moment. I discovered the Alibaba stock price, how it went up. And I started tracking that. No, I'm not kidding. I started tracking that once a while. And my reasons for tracking it are very different from why somebody who's interested in Flipkart would track it. My reasons are exactly the opposite. And the last few weeks, and I could say till yesterday, Alibaba's stock is coming up again, but it's nowhere close to where it was earlier. And the reason I say that is then you start thinking that, there was this whole notion of, and just the earlier panel, they talked about that, this is East meets West. There's a huge momentum towards consumer mobile. So just this notion of India has to produce some Alibaba, which I'm not going to argue for or against it. But that notion, that sort of becomes a little shaky when the markets get a little volatile, which then means, and I'm going to now start pulling my panel into the discussion, does that then mean that that is the trigger for getting B2B to become hot again? Is B2B that flaky that it needs some stock price to drop and some wave to change, and people start getting interested in that? So I wanted to pull you in, Alok, because you've been with SAP. You are a B2B investor now, primarily. I assume you don't go by the T that he's wearing. It's actually a B2B company that is the name that is there. So I wanted to ask you this, Alok, that in terms of trends, and in terms of you go back to the original sort of strength of India on the B2B side, the software and the tech side, versus what you're seeing today. So a couple of things. Are you seeing a definite shift because of market volatility towards B2B? Or is it something more real than that, that India always did produce great B2B companies and will continue doing so? So both as an investor and the kind of startups you see, I just wanted you to touch upon what's happening in the B2B world.
Yeah, so Alok, first of all, I think that the trend that you're talking about in many ways doesn't matter, because flavor of the day by definition changes by the day. And to build a solid company takes years to build. So we should assume that during this period, flavors will go up, flavors will go down, and therefore that trending will continue. I think that's just a given. Doesn't matter, by the way, whether it's B2B or B2C, right? Even 2 years back, at least when I started, or 2.5 years back when I started my investing career, I saw lots of clouds about e-commerce. 1 year back, suddenly it has gone up. Who knows, 6 months down the line, people will be talking something else. So I think that issue, I think pretty much every sector will have to face. I am personally very bullish on B2B, not just because that's the job I do, but I fundamentally believe that ultimately businesses do a lot of spend. They do buy a ton of things. Technology has a role to disrupt many of these spaces that businesses are buying at the moment. So therefore, first of all, is there a need or not? I think the need is certainly there. The second question as an investor that we have to ask ourselves is there a supply of great entrepreneurs in that space in the market that we are operating in or not. Historically, India has produced great companies on the services side, but I think over the last few years, we have seen a certain spurt in the product-oriented startups as well. And that doesn't mean, by the way, that the services-oriented startups are not going to flourish from India. I think for the foreseeable future, I see them flourishing. So we invest in services companies as well. But on the product side, I think there is a completely new class of entrepreneurs which have a global thinking, are able to think global products, and have the sales and marketing muscle to be able to take their products both in India as well as globally. And I'll not get into examples specifically immediately, but I also like the fact, to your trend question, that not everybody's flocking into these companies today. I actually like the fact that there are very few investors who are willing to write checks to B2B companies, because we can, in a sane mind, actually make a judgment call on a company. We have the luxury of being in touch with the founder sometimes for several months before we make a call. And therefore, you are not making a judgment call just because Nitin has just written or agreed to write a large check, and therefore we have to respond in the next 24 hours. So luckily, I think we have the luxury of making sound judgment, hopefully. But I'm personally very bullish on the B2B space.
So thanks a lot, Alok. And I wanted to, now, bring you in, Nitin. And if I can say, from a PE lens, cash is king, right? I mean, at the end of the day, it's about the cash. It's about, and B2B generates cash. They may or may not be making profits, but it's real cash. It's real cash with a journey to possibility to high profitability. So from a PE lens, and this is me speaking as an outsider, all you should invest in is B2B. And I've seen Warburg just invested in Capillary. I'm assuming that B2B is the only sector you look at. Any thoughts?
No, actually, that's interesting. I think I would actually echo Alok's view on many of the points. We actually look at B2C and B2B. We have, no problem evaluating opportunities in both segments. I think that we have a very specific B2C playbook that we focus on, which primarily centers around network effects and winner-take-all, and one can argue, is that creating the kind of behavior you're seeing in the B2C market? Maybe it is. But on the B2B side, I think that there's something to be said about, one, enterprises' willingness to continue to spend, especially for ROI. Solutions that can drive high enterprise engagement and repeat behavior, and essentially, when the customer acquisition economics around building those businesses are attractive, then you can just keep acquiring new customers, especially, of course, the market opportunities have to be large enough. So that there's, for some B2B businesses, and we've been spending a lot of time looking at SaaS businesses. We've invested in a SaaS company very recently, a company called Capillary, which focuses on enterprise, retail, CRM in India and other emerging markets. I think there's some very, very interesting dynamics of B2B businesses, especially around when you crack a problem that an enterprise is willing to pay for that particular solution, and you're able to acquire the customer and service the customer profitably, and there's a very wide market that you can tap into, whether in India or globally, then it makes for a very attractive business.
I wanted to stay with you, Nitin and Alok, a little bit more. So if you look at B2B investments, and with you, Nitin, you as Warburg, you probably have two choices: the services companies, right? And that's seeing the tier 2 services companies are seeing a lot of action, a lot of investment coming. As Zensar was one recent example. And then there are capillary kind of companies, which is sort of platform plus services. So within B2B, what kind of segments would you look for? What kind of plays would you look for? And would you look for India-centric plays? Would you look for global plays? And would love to get your thoughts on that.
I think that Warburg is actually very active both on the services side as well as on the product side. We were investors in WNS, so we understand services very well. We're also actually investors in Quest Global, which is a Bangalore-based aerospace engineering services, an R&D services company. And of course, we're investors in Capillary, which is a SaaS play, and we've actually been investing in SaaS plays globally, not just in India. I would actually say the unifying theme of both the services investments as well as the SaaS investments, both in India and the US, is you have to go deep. You have to really understand your vertical in a manner that many of the, for lack of a better word, the horizontal players whether it's very large IT services companies, or if you were to think about the large, SaaS plays that operate across verticals, like a Salesforce or whatever the case may be, or a Siebel. To the extent that you can own and understand the problems faced within your given sector, I think you can build actually a very defensible business. And then it just, to your question about, India focused versus global focused, the dynamics may be very different. So for example, if the problems that Indian retailers are facing or emerging market retailers are facing are different from the problems that global retailers are facing, then maybe a capillary should be looking at building a solution for emerging market retailers. But in the case of Quest, to the extent that you're looking at targeting the requirements of aerospace, automotive, and oil and gas OEMs, regardless of where they may be, you can offer solutions within that specific niche.
So Alok, just continuing with that, and you as Helion, you've invested in a lot of earlier stage B2B companies, very interesting plays. What are the things that you look for when you look for investing in a B2B company?
So I'll separate that answer into both services as well as products, Alok, for a minute. Since we are an early stage investor, we do feel that of late the number of opportunities on the services side have reduced. It is more a private equity play as opposed to a venture capital play. We just made an investment in an analytics services company called Extria. Analytics is a massive opportunity. Beyond that, I think there are some emerging areas, but I don't see a whole lot of opportunities. But why those opportunities make sense if they were to arise is because they're highly capital efficient. In a services company, you don't have to build a product for 3 years before you take it to market. You scale cost as your revenue scales. Yes, there is a certain investment in sales and marketing that you will have to do ahead of revenue, and that's why they do need some capital. But by and large, they're actually pretty good cash generating companies. And one can actually build sometimes a pretty decent sized services company for literally just $20–30 million of overall capital before they exit for a decent size. So we continue to look at those spaces. On the product side, there is, at least I'm not a believer that large enterprise-centric plays in India still make sense. And I'm sorry, Umesh, I'm going to throw you a little bit under the bus here. For example, during my SAP career, I've seen many new product launches happen in India. Rarely have I seen that adoption of those products in India will happen at the same time as it happens in a US or a Japan or a Germany. Basically, for new concepts, finding early adopters is very hard for medium or large size enterprise-oriented plays in India. And that makes it very hard for an entrepreneur to focus on India as a geography. I do, however, believe that in India, unlike the US markets where the innovation happened top-down, it's the General Motors, Procter & Gamble, etc., who initially bought software, and eventually it has moved downwards. In India, that innovation is happening actually bottom-up. It's the consumer segments which have adopted first. We are seeing a lot of action happen now in the micro businesses. These could be individual retailers, this could be accountants, these could be doctors. So that innovation is actually happening bottom-up. And I do feel that in that segment, to Nitin's point, both the needs are different, so that the product will be different. But what is also different is the go-to-market. When a QuickBooks takes its product to market, it is going primarily via marketing. It's completely via sign-up online. There is no human touch in the process. When you go and sell any software to a retailer in this country, you will have to make 3 to 5 visits, and that's a feet-on-street model. The difference is that the unit economics does work out in India for that kind of a go-to-market model that does not work out in the US. And that kind of a go-to-market I actually don't think is going to be figured out by companies sitting in US. That will indeed be figured out by companies which are getting created out of India. And that's what makes at least us bullish. Even if it is quote-unquote a me-too play from a space perspective, I do think that both the product as well as the go-to-market is going to be remarkably different in these geographies.
Sure. Umesh, let me change gears here a little bit. And you as the CIO of Yes Bank, and we all know Yes Bank as a new bank, took a lot of initiatives in terms of technology, and I remember speaking with you in those years, asset-light approach, you were proactive, you were working with startups, you actually used to mention a few startups to me, and then at NSE, NSE is of course at the core of it, cutting-edge trading, cutting-edge technology, but I've known you to be open to working with startups. Now my impression, in India is it's not necessarily true for all corporates and enterprises. In the Bay Area, it's different. I know Cisco will work with a B2B startup or a large company pretty much in a similar way. I mean, the scale could be different, but the openness is there. So I wanted to hear from your experience, both as a user. So what kind of startups did you see? How did you work with them? So you've actually seen both the startup side and the large corporation side. Would love to get your thoughts on and advice to budding B2B entrepreneurs.
So in fact, what Alok mentioned, as I said, he threw me under the bus. See, the big difference that I have observed, I work with MNCs and I work with Indian corporates. And I would say, if you are trying to collaborate with an MNC organization as the customer, it's impossible. Okay? If you're a startup in the enterprise business, because MNC corporation, the innovation is not happening here. MNC corporation in India is just an extension of head office somewhere else, right? So for someone to say no to you is much more easier than to be innovative, trying to implement something, go and get headquarters approvals, etc. That's not going to happen mostly. Okay? On the other side, I would actually say, I think the Indian enterprises I have found to be very open to startups for different reasons, maybe at times, but I would say with the businesses getting transformed, depending on the life stage that you are in, depending on the larger business plans that you are in, I think there's a lot of transformation that's happening in the businesses. There, the CIOs are not only open, they're under pressure to be innovative. Okay? So from that perspective, I think the CIOs in the country are still finding a way around how to balance the growth rate of return versus the transformation innovation rate of return. But largely, I think last 6-7 years, post Lehman, etc., I think people have come around saying, now we need to really transform and innovate. Originally, it was driven by cost pressures. Now it is driven by business. The second thing, I think, one thing that I have noticed is a lot of this experimentation is also driven by low cost. So if you have startups wanting to have a platform to showcase, then the cost of getting that startup in is much lesser, versus buying an established product, etc. And their ability to then change, tweak the system, tweak the product, tweak the services, whatever you're buying, as per your requirements, because they're also sort of evolving at that point in time, as against, buying something from a very well-established player. Again, as a supplier, they don't have much flexibility to tweak their product. So for example, in National Stock Exchange, I would need, every microsecond to be shaved off of the router switch. Can I go to an MNC player and get that out? The answer is very difficult. But if you actually partner with a local corporate, they'll give an arm and a leg to do that for you, so as to get a platform to say $1 billion a day, 1 billion orders a day, they're running on my platform. So I think that is the second very important thing. Don't worry too much about the cost, or you will incur actually implementing a system, etc. But find a good customer who will be a showcase customer.
So, I mean, that's interesting. I mean, that shaving a microsecond off a router and buying from a startup scares me as Cisco. Kanchan, I wanted to bring you, and again, changing gears a little bit. Sounds like, I mean, as I said in the beginning, we're all B2B guys. We have vested interests there. Sounds like very interesting possibilities. I mentioned that MNCs, at least where their headquarters is, are very open to working with startups. Umesh is saying that Indian companies are very open as well. The question then becomes is, what do you mean by B2B? Because B2B could mean multiple things. B2B could mean a marketplace. B2B could mean, a new routing technology, a cloud automation software, something in security. So very different meanings. Based on your experience as an entrepreneur and your association with TIE, and the fact that you meet many startups, where are you seeing companies coming out? I mean, what kind of B2B companies are coming out? And layer on that, where do you think the opportunities could be?
Sure. So B2B, one B2B to another B2B to third B2B is not exactly the same thing. So B2B could broadly, in my mind, could be divided into 3 broad categories. One is a horizontal play, a product like an ERP product, an HR product, or whatever, which everyone in the organization is going to use. Very difficult for that kind of a product for a startup to build, come up to the expectation of a large corporate and sell it to them. However, that kind of a product, because of the price point and the agility that you would show, would work very well in a small and medium segment. However, if you take a vertical product, a product for a sales team, product for a recruiter, product for an accountant, those products are very well taken in by the large corporates. Because a smaller team which needs to be convinced, and they typically are looking for newer ways to look good in the eyes of the rest of the organization, that this team has really transformed. And it might sound uncharitable, but the fact is that when you're selling it to corporates, you have to ensure that the team, if they use your product, they start looking better compared to the rest of the organization, and that becomes a good selling point to them. It should add value to their CV, it should add value to the KRA at the end of the year for performance. And such kind of products really work very well because those teams take quicker decisions. However, those kind of products for a smaller organization does not make too much of a sense, because in a smaller organization, the team is like one-person team, right? For them to use a tool, which is elaborate tool, may not make sense. The third thing, which is doing really well, is products which cater to other technology organizations, be it plugins, be it SDKs, be it APIs, be it analytics engines. All of these products, we see a lot of companies coming in them, and they have a huge role to play, because a whole lot of technology organizations, if you look at it, they are challenged with what all they could do it all by themselves, right? So you would have a large e-commerce player which may come and say, okay, I will do everything end-to-end myself because I have everything, all capabilities in-house. But beyond the top three, everyone else will go and look for a lot of such options. And a whole lot of these things have a large global play as well, because what you're offering here is similar problems are available to solve in other countries as well. So I think these three broad areas that I have seen, and typically I have seen most of the companies which has tried to do SAP for India or Oracle for India has failed.
That's interesting.
Traction,
so,
yeah.
Umesh, I wanted to come back to you with that. I mean, you've been a user and a customer for a lot of these startups in your Yes Bank and NSE roles. If you have, I'm just thinking through, if you have startups coming to you from India and they want to sell either tools or sophisticated technology, versus you've got the bigger biggies, the MNCs sitting there, the Oracles and the Ciscos, etc. Where would you, as a customer, be more open to working with startups? In what kind of areas? And what kind of areas you would be like, okay, I don't want to take a risk. So I want to get a sense that if for a startup, what are, within the B2B world, particularly in the India focus, what are the doors they can open faster versus areas, it's probably too hard to break into?
I think first of all, and that's true for startups or for anyone else, to understand the context in which that organization is operating, what are their drivers at that point in time, is the most important thing for anyone to approach. Because you might be selling the best of the technology, might have a long-term implication, but at that point in time, if that is not required, that is not required. And organizations work in a certain way, there's certain budget, certain direction. And some organizations do have innovation budget, some organizations might not have innovation budget, they might take a call on the fly. So first of all, understanding the context completely in which the organization is approaching is very important. If I were to segregate where I would be more innovative, where I would be not, I think risk appetite in that particular specific area is the biggest key factor. Okay. So if I were to be, let's say, looking at establishing a payments banker coming, right? If I'm looking at payments banks and I'm saying I want to be very large very soon and I need a core banking to be able to handle it, my sense is if I were the CIO, I would say I would go with someone already established.
Right.
Okay. There is nothing very drastic that one can do about it. All I need to, really core banking has not changed much. Okay. So I would say, let me just float a tender, let me get the best price, whatever you can do. But I would also then say, I want to have a very differentiated customer experience.
Right.
Okay. Now that is something that if in a commoditized service provider, someone who's selling to every single payment bank is coming and selling, then frankly, I'm not building a differentiation, right? Now, whether I do it in-house myself to build in the differentiation, or I find some, good innovator, startup kind of an organization, which is coming to me with an already existing offering, which is highly differentiated, etc. So the different two areas, one is the risk appetite, what is your risk appetite? And second thing is the differentiation that you are bringing to the business model, the end business outcome. There's just one more thing, I think the, not only technology is the decider now, it's I think a lot of guys in the business who decide what's, so to be able to resonate with business guys on the, especially when you're talking about startups in business domain space. If you're talking about underlying infrastructure space, etc., that architecture, etc., is largely technology centric. But if you're talking about business domain space, then I think business is a very big stakeholder, and they also need to be gotten on board.
Right. That's a very interesting insight in terms of what is core, what is commoditized, and if you're a startup, breaking into that is hard. But user experience is as important in B2B as it is in B2C. It's a critical differentiator. Ultimately, a B2B organization sells to a consumer. I wanted to revisit one question, Alok and Nitin, again. This whole SaaS model, B2B SaaS, prove in India, sell globally. I'll be candid, I'm a bit skeptical about that. There are great names in B2B which have cracked that model, but those names are very few. So trying to make a product here, a SaaS product, and assuming that somebody will discover you on the web, or you'll have a team there in the US and sell it. So if you have to distinguish between India B2B, we talked a little bit about it earlier, an India B2B versus a global B2B, where would your thoughts be and where would your money go?
In saying that I'd look at both, I'm actually very excited about both, but let me make the case for India B2B, because I actually think that it's a very interesting opportunity for Indian SaaS companies. First, and this is going to echo many of the points that Umesh had mentioned earlier, but if you were to think about some of the sectors within India that are growing very well, retail, financial services, e-commerce, those are all potential client bases if you were to think about targeting clients within India. And I think most Indian enterprises also recognize the importance of IT and also the fact that they can't build a lot of this in-house. And they don't want to wait a year for something to roll out. And the product may need to be customized, and they like this idea of pay-as-you-go. And they're now comfortable having their data actually be stored, in some cases stored off-premise. So I think the mindset of Indian enterprises to think about SaaS is actually moving in the right direction. I also think that when I think about SaaS companies within India, and this again echoes Amish's point, there are instances and cases where Indian SaaS companies may actually be in a great position, whether you have to customize something to meet the local market dynamics, or whether there's a service-oriented component that an MNC may not be able to focus on, or maybe the global players simply view the market to be too small and the Indian companies are sort of operating under the radar. I think those opportunities do exist in India today, and I do believe that Indian companies, Indian enterprises, and Indian customers are willing to pay for ROI that can be demonstrated. If you can demonstrate ROI to them, and in terms of, okay, this is how it's improving to your business, this is the impact on profitability relative to how much you're spending for our product or service, this is the ROI you're getting, they understand that. That being said, the first is, if the market in India is not large enough, which is the case for many Indian SaaS companies, what they've been doing that I think has been very smart is looking at adjacent areas outside of India, not necessarily the US or the UK, but looking at Southeast Asia, looking at the Middle East, looking at other emerging markets. Sometimes their customers in India can take them there because they'll have operations in Southeast Asia or the Middle East. Often there are Indians who are actually heading the technology or the head of marketing, or et cetera, in those geographies anyway, so that's not too hard for them to get into the door there. So I think that regional opportunity can address the issue of market size in India. The second concern that we notice with respect to dealing with enterprises or SMEs in India is how do you get them to pay? And I think that's something that you have to focus on. The team has to focus on collections. Maybe it's harder for us to get SMEs to pay than it is to get enterprises to pay, although Just Dial's sort of figured out how to get SMEs to pay for a listing service, so there's hope for the rest of us. And then ultimately, I think another challenge that many Indian SaaS companies have to focus on when dealing with enterprises in India, and again, to Umesh's point though, when you have a services component, there's always the risk of having to over-customize for a specific client. You have to remember you're building a software platform and you're not a services company. It's a fine line you have to walk, and you have to sort of remember, at some point in time, I have to say no to this customer because I can't just customize for everybody. Then the economics just go for a toss.
So Alok, little bit about, what kind of B2B companies and India versus global, but also, in terms of valuation, you said that, I don't have a gun on my head when it comes to B2B investment. Now, assuming the Alibaba price still continues to behave in a certain way, do you think that will change? Do you think the B2B valuations will start skyrocketing? Just like in hyper-local, the hyper part seems to be going away, at least from a valuation lens. So B2B, I guess the question I'm asking is, between supply of B2B companies in India and investors, is there a mismatch either way?
See, I think a lot of people, if you look at even the B2C, for example, today, a lot of people are enamored because a Flipkart between 2009 to now has skyrocketed to $15 billion, or a Snapdeal or a few others. I think those kind of stories in B2B are going to be relatively fewer. Yeah. There are examples in US, Slack has a very similar trajectory in that country. So I'm not saying it doesn't happen, but I think it doesn't happen that quickly. So I'm hoping, but I also believe that investors will not be flocking to B2B much the same way as they have flocked to B2C. So I think that sanity in the markets will still remain. Number two, I think in B2B, though I would imagine that same for B2C as well, but you do have to look for the buy in a B2B cannot happen purely for emotional reasons. It has to be for a very true value that you're delivering, regardless of the price. Actually, it doesn't even, just because it's free doesn't mean it'll get adopted either. So to be able to get true user engagement and deliver the value, I think it takes a while to figure out. So one will have to go a few notches deep into it. Number three, I also feel that there are some businesses which are easy to comprehend in B2B. So like, we talked about ERP or an HR software. I think those are relatively easier to comprehend because you can think of yourself as a user. Most B2B businesses, however, are very difficult to comprehend. I mean, let's take a router example. I mean, I've technically done
I also don't understand it.
Yeah, I mean, I've done a bachelor's and master's in computer science. I do not understand anything about a router, right? And people are talking about back planes, switch planes, this, that. I mean, who understands what that is? So I think it is just our own limitations as investors. I think it's very hard for us to understand, even in B2B, it's such a large landscape. It's not overnight that just because Nitin is writing a check, I can wake up tomorrow saying, gee, I should also write a check. I think it's very hard. So I don't anticipate a similar frenzy, and as I'll repeat, I'm actually very happy that that frenzy doesn't exist.
No, that's right. B2B requires a much higher level of understanding. It's not to say that consumer doesn't. Sorry for those who might have consumer interests here. But the understanding of B2B and the valuations may not go that high, but let's also face it that if you look at the venture industry itself back in the US, it pretty much started with B2B if you go back to 60s, 70s. I mean, venture industry was basically to fund technology companies. And if I look at Cisco and if I look at what's happening in the US, it's a consistent cycle. That always happens. There are companies that are formed, there are companies that grow, and there are companies that exit. And it's lower key, but it's a consistent cycle. I just wanted to conclude because we'll reach the last 10 minutes, but wanted to pull in Umesh and Kanchan again. Kanchan, with you, given your exposure to startups, and I would want to hear from you, if B2B entrepreneurs will be many in India, because I go back to the statement that, large companies from India, whether it's IT companies, semiconductor companies, R&D centers, have a lot of talent. If B2B companies have to look for opportunities, and based on what you're seeing, and based on your experience as an angel investor as well, and then Umesh, you can add on that as well, what should new entrepreneurs be thinking about? I mean, what are the kind of areas that they should focus on?
Very interesting. So actually, if you look at it, one thing we all miss out on, the fact that the same people who we call consumer in B2C are working somewhere. They are either employees or they are running companies. If, like Kunal had said in the earlier panel, that behaviors are changing, if behaviors are changing while he is a consumer, you can't expect his behaviors to remain same old when he goes back to work, right? Which basically means that the areas which touch his day-to-day communication needs certainly is going to evolve. It's going to evolve slower in India than it is evolving in US, but it is going to evolve. And that is where, you know, the team-oriented platforms which bring productivity, which bring tacking, which bring analytics to things, areas like sales, will evolve. Businesses in India, and I have seen from a lot of startups that I've worked with, which works on the revenue side, which help them get more revenue, always get a call, meeting, possibly trial. Businesses which go back and say, I will save you cost, I will increase productivity, you'll have to try at least 10 times to get one meeting. So I don't think that's something which works out in India. I'm not saying you should not do that, but be careful about you know, how good the value proposition sounds. I'm saying not it is, how it sounds when you make a call. And I think that's what is the trend that we would see. Another trend that which is a welcome trend which I see is that while a lot of consumer companies are started by very, very young kids, right? The fact is that if you're an oldie like me, you don't have competition from them because they have not worked long enough, they don't understand, they don't have the depth to do it, which means if you're working in a services company, IT services company, and you have worked on you know, derivatives and wherever else, in your, while being in Infosys, Wipro, TCS, believe me, you have a lot of depth of understanding which you can actually bring in to create products. And there are organizations and there are banks which look at such niche areas and they buy products for. And I'm sure Umesh can add more value on that.
So Umesh, just to add one quick sentence to that, you know, I guess thoughts from you as having been a senior buyer in large organizations, you know, how should B2B entrepreneurs think about things in terms of products, in terms of selling? Any last concluding thoughts? So I'm just saying that thoughts and you know, sort of lessons from you for budding B2B entrepreneurs in terms of how they should think about their business overall.
Just before I get there,
Sure.
I think what Alok was mentioning about as an investor, B2B requires far better understanding at times. I think that is true for the entrepreneurs also. You know, in B2B, I do not think, you know, you can just imagine an idea and start doing things. I think when you have a deeper understanding of businesses, largely speaking, you know, whether they're horizontal applications, as Kanchan mentioned, which are generic across the organization and they're pan-industries. So, you know, the same HR kind of application can port to other different industries versus or whether they're domain-specific applications or services. I think the understanding of the context is far more important than, you know, so if someone comes and sells you programming services, it doesn't matter, everyone is selling programming services. But if someone actually positions how they've helped another bank transform using whatever technology or whatever services they're offering, I think that resonates much, much better.
Right.
As I said earlier, actually, just to come back now to what you asked, as I said earlier, the context is very important. So while you might have a fantastic offering, fantastic product, but if it is at that point in time not a priority, you know, so you need to be able to gauge what is the context in which the organization is operating, whether it matters to them, does not matter to them. So you might be selling innovation product, but the organization is struggling on day-to-day operations. So, or they're not going through the transformation, right? Management is not taking decisions. So there are many, you have to be careful about the context. Second thing I would say is definitely most organizations have learned this now. Reach out to the businesses. I think especially if you're selling anything to do with domain, you know, much to pain that it causes IT departments, I think businesses are taking far more decisions now. So from that perspective, that's a must. You connect with businesses and understand.
Great. So we're in the last 7-8 minutes, and I'll open this up for questions. I think great insights from all of the panel.